All right, welcome back on Africa Business Radio. We've still got Winston with me. Hello, Winston.
Hi, Rachel.
Good morning again. And it's time for us to get into our guest segment this morning. Very captivating topic we'll be talking about today. And I've got Jakob Frank in the studio. It's not very easy to drag very, very busy people like this out on a Monday morning. But thank you for making it here. Good morning, Jakob.
Good morning. Thanks for having me.
It's good to have you on the show.
Absolutely.
All right, so we're talking impact investing. Yeah.
By the way, Jakob Frank is associate at Loftynic Allied Partners, right? So
yeah, that's true.
And he'll be here to dissect some very, very crucial topic with this. All right.
So we're talking impact investing, and there's this very broad spectrum of what is defined as impact investing. Now, what factor is prominent when you think about impact investing?
So basically, when people talk about impact investment, they talk about into investment into companies. It can be funds, it can be the organizations that have, apart from a financial return, they also have a social return, environmental returns. So what they're trying to do is, apart from getting financial benefits for the economy and for their fund, they're also trying to create social and environmental impact on the population. So that's consistent. Impact investment.
So can I say that an angel investor is an impact investor?
He can be, yes. So impact, the thing about impact investment is a very broad definition. So it's not very specified on what the impact is. I mean, impact can be also negative impact.
Right.
But so there are some investments, for example, Flutterwave and Paystack, they have some kind of impact on small businesses by providing financial solutions for them. So it can be seen as an impact for financial inclusion of small businesses. So that impact can also always be defined in different ways. And I see it as a positive impact on the society. Some agriculture enterprises in Nigeria here, they also have impact through their operations because they reduce the cost of food or whatever.
Go ahead. Now, I just wanted to be sure, like, we're on the same page and we're understanding what you're saying. So interventions as well, did they count? Like government interventions?
So mostly the way governments participate in that is by providing the right institutional framework for those kind of investments. Some also invest into funds through, not as a government, but through their development funds, but not as governments per se.
So sub-Saharan Africa is very, very ripe for impact investing.
True.
If you look at the various sectors, let's say the health sector, for instance, overwhelmed. The agri sector, the education sector, we have infrastructural deficit across the entire continent. So let's talk about filling this gap now. I'd like to understand what you're doing and what areas you're plugging in.
True. Sub-Saharan Africa has a huge potential for impact investments. And the market is growing exponentially. Most of the capital goes to East Africa currently because they have the right kind of institutional framework. And Nairobi is kind of the hub of impact investment. So because they have a relatively good ratings in investment ratings, business, ease of doing business. So it's a really big topic. So what I'm trying to do is try to bring that model to West Africa because I see a huge need for it. And what we are trying to do is combine existing structures. So development finance institutions want to support enterprises. It's called the entrepreneurial model. And they can't do that by themselves. So they need partners. So partners could be social banks that provide like low interest loans. It could be philanthropic investors who just want to provide cheap capital but are interested in the impact. And of course, the most important thing is that the concept is localized. Because in East Africa, when I did my research there, the problem is that most of the funds get into like foreign entrepreneurs. So you have foreign money getting to foreign entrepreneurs, trying to solve local problems. And you can imagine that this doesn't really work because they don't understand the problems very well. And because the lack of local investors, a lot of the companies also fail because they don't understand the local market very well.
Right. Okay, so just taking off on that, right? How important, like, can you buttress more on the importance of building healthy local ecosystems, and what role should local communities play in also designing their own solutions? Like you rightly said, most times the investment comes, and I mean, it's not your money anyway, but then you have a role to play as local authorities. So what could they do, and how important is this?
So I think it's really important because currently the average ticket size for impact investment, so that means for investment per company, is around $2 million. So you can imagine what kind of companies are even able to receive that.
Right.
So when you without including local communities, there's this chance that the impact is not really trickling down to them. So they're currently there's something called the Acumen model. They're trying to reduce the ticket sizes to between $100,000 and $200,000 to support startups, small startups who are doing work on ground. So the way the governments could support that will be by providing the right policy framework for that, to make those kind of investments easier and to build an ecosystem of trust and institutions that support small ticket size investments. And one of the major issues is their fear of investing in small companies is the currency. Currently, the inflation is so high that small ticket size investments are really, really risky. So that will be one major thing they could work on. And also, Nigeria is not really easy for foreigners. Like if starting at the visa issue, the culture, the issue of trust. So there are many things the government could tackle. So yeah,
all right, so I'd like to get an understanding into the models that you've had to use. I understand that you've also done stuff, or you've played in the Kenyan space. We had a conversation about that yesterday. So I want to know, did you have to work with the government to drive this agenda? What models did you have to work with? What are you going to be implementing here in Nigeria? And, stuff like that.
Yeah, to be honest, I tend to scare away from governmental actors a little bit because of the way they operate. But I try to get a feel of how the government acts through talking to SMEs, talking to fund managers, talking to consultants who are operating that space. And what in Kenya is very interesting because the government kind of accepted that model and now is participating in those events, trying to make hackathons for policy solutions, which is funded by impact investors. They get startups and young innovators. How do we make our policy environment better? So the government, when they see something is working, I believe they will join. And so I believe that's possible here as well. But first of all, that kind of understanding has to be created here. And
making them buy the idea and just give you that support.
Exactly. So I think one of the major thing I don't want to do is I don't want to create this in my silo. I don't want to create an impact investment in my head and I talk to nobody. So this is also why I was very happy to come on that show, because I need feedback. I need people to join me on this, to localize the concept. What makes sense in Nigeria? How do we make this the most efficient way? How do we combine all the needs of the different actors to provide capital to those people who really want to change and create a social enterprise?
Wow, fantastic stuff. Okay, so when you do this, like when you go into a country, you initiate the process, and then say you hit the ground running. How do you measure the impact? How do you review and say, okay, you know what? I think we've made progress here. I think this has been changed. I think this has been very successful. How do you measure that? Yeah,
so this is one of the major issues because some impacts are very hard to measure.
Okay.
But there are a lot of tools to measure that impact.
Okay.
So when people invest in companies, they always measure the financial process, like how much income do we create, like how much returns, revenue, how's that? So you just add some tools to measure, okay, through your operations, how many products are you selling where? And so measuring that can be difficult, and it's also one reason where impact investments are highly criticized, because people like to produce a lot of reports on, we did so much impact, and don't even focus on the actual impact. But I believe that there are ways to combine that, because you need some kind of reporting. You need to tell your investors, like, okay, this is what we financially created, this is what we did socially or for the environment.
So those reports.
Yeah.
Okay. Right.
Yeah, this is how it works.
Another very important question: what asset classes are you guys looking into, and the risk assessment you look at also before making a decision to invest? Like, what are the risk assessments? What do you consider before investing?
Yeah.
And what areas specifically?
So the target sectors are health,
okay,
education, like education tech, sometimes fintech if it's for financial inclusion.
Okay.
It could agriculture is a big one, and yeah, I think that's it. And what was most important is always that it has some form of technology to be scalable, and also technology that is usable for the bottom of the pyramid. So an app might not always be the right solution. And then impact investment is still investment. So you still have to consider how are the funders, what is their experience, what is their product revenue, and it always depends
ease of doing business, all that stuff.
So it always depends also on what kind of ticket size you do. So if you have a 2 million investment size, the investment process is completely different than if you support a small startup with like $100,000, $200,000 who are starting their process. So it always depends on who you're targeting. What is the interest of the investors? Do they want to support big businesses and grow their operations, or do they want to support small businesses who have new innovative ideas and who could be the next
big tech? Right.
So you take your stake in a sector or in a business, you develop interest in that business, and then you provide some funding for the business, right? How do you get your payback?
So as every investment, it depends what kind of instrument you use. If you use debt, you get it through loan interests. Okay. And if you use equity, it's a high risk. But
because what if the business doesn't get successful?
True. So it always depends on the model you use. And there's something that is called convertible debt. Okay. It's a new form of investing into companies by providing debt finance for them in the first 3 years. And then you have another possibility of changing it into equity. So that kind of de-risks the process again.
All right.
So it's interesting what kind of new models are coming if different actors are coming together and trying to see, okay, how do we provide the best financial product for this kind of company?
Nice. All right, now, so just before I let you go, what's the pipeline like?
The pipeline, to be honest, it's sometimes difficult because most of the capital providers are international, so they don't really understand the pipeline. But you also have that local investor who has the pipeline. So combining those two interests, who are sometimes even diverging, because international people are looking at the impact and the local investors are more looking at the revenue and financial things. So the pipeline can really depend on the actors you engage with. So but I believe the pipeline for small enterprises who are trying to solve a social issue is really big. It just needs to be in the right network, and it needs to the right institution to bring all these actors together.
Right.
Yeah.
Okay, so to be very honest, and we need a very honest feedback on this. The experience so far in Nigeria. Have you been hit by the seemingly not so receptive feedback from the government in tech and stuff? Have you had like bottlenecks? Have you had issues? How's it been so far? Has it been just smooth and fantastic? Let us know.
I don't think in Nigeria a lot of things are very smooth and fantastic. But I had a good time, and the kind of people I'm meeting, I feel like there's something growing. So this is still very early stage in Nigeria. So what I'm doing currently is just talking to people, try to get their feedback, bring the feedback together, always rechanging the concept of the fund. And what I like in Nigeria is that the entrepreneurial mindset is way stronger than in East Africa. Like that, so many ideas, so many people are ready, have so much energy to change things, and so that's been really good. And so I'm always trying to be between those people on the higher level, like development institutions, investment managers, but also local entrepreneurs, and trying to combine those two interests. So that's been my challenge currently.
Okay, because I mean, like like you rightly said, I think that there's so much potential, so many avenues, and you talked about tech education, especially. I mean, even before the pandemic, that was already needed in Nigeria. So now with the pandemic, there's even more reason to, ensure that we ramp up or boost, tech education in Nigeria, because it looks like people may be studying from home for a long time in Nigeria and a lot of other parts of the continent. So that's a good one. Wish you guys all the best.
Thanks a lot.
All right, guys, we've been talking to Jakob Frank, who is an associate at Loftynic Allied Partners. We're talking about the landscape of impact investing or investments in Africa. It's been a very interesting conversation, Rachel.
Thank you so much, Jacob, for joining us.
Thanks a lot.
Stay here.
Stay here.